The most indebted real estate developer in the world and the face of China's housing crisis, Evergrande Group has filed for bankruptcy protection in a U.S. court. The company sought protection under Chapter 15 of the U.S. Bankruptcy Code, which protects its U.S. assets while it attempts a restructuring deal. The code also provides mechanisms for dealing with insolvency cases involving more than one country. Fears of a worsening Chinese real estate crisis have increased as a result of Evergrande's bankruptcy protection. With over $300 billion in liabilities, the Evergrade Group is the world's most indebted property developer. Evergrande announced in March that it was restructuring its $31.7 billion in offshore bonds, collateral, and repurchase obligations. For months, Evergrande has been working on an offshore debt restructuring agreement, and it unveiled a proposal earlier this year. It offered creditors a choice to swap their debt into new notes issued by the company and equities in two subsidiaries, Evergrande Property Services Group and Evergrande New Energy Vehicle Group. However, it announced a combined loss of $81 billion for 2021 and 2022 last month, raising doubts about the feasibility of the debt restructuring plan. There are fears that problems in the country's property sector could spread to other parts of China's economy as growth slows. Since the sector's debt crisis unfolded in mid-2021, companies accounting for 40% of Chinese home sales have defaulted.
For years, there have been warnings about the borrowing binge and the building binge in China's property sector.
There are enough empty homes in China right now to house about 90 million people.
The company said the filing in a Manhattan court is procedural, but it shields the company from creditors that hope to sue them or tie up assets in the United States while it is undergoing restructuring in Hong Kong, the Cayman Islands, and the British Virgin Islands. Evergrande's liabilities indicate China's unprecedented debt crisis in the once engine of growth property sector, which accounts for about 30% of the country's economy. Developers first noticed a change in 2020 when the authorities established leverage requirements that builders had to meet in order to borrow money. Developers had grown accustomed to consuming debt for growth to fuel the enormous demand for apartments. According to a Bloomberg index, the frequently issued junk dollar bonds were under pressure and dropped to an average price of about 65 cents. The fate of Evergrande has broad ramifications for China's $60 trillion financial system and the potential to cause ripples across banks. Developers who were responsible for 40% of Chinese home sales have defaulted since the debt crisis began in the middle of 2021. Evergrande was among them. It first missed a payment on a foreign dollar bond in December 2021. Another big player, Country Garden, the biggest privately owned developer in China, failed to pay $2 bond coupons due on August 6, adding to the country's property market fears.
Who's next to restructure, at least announce plans to restructure? Any names come to mind? What's on the radar of your team?
I think Country Garden is one that the market is speculating to go through. You know, it has so much debt, so even if it's able to extend some of the bonds for the short term, it will eventually have to go through a restructuring plan if the sales don't pick up.
China's vast real estate market has yet to recover. Building was suspended on dozens of projects, leaving many pre-sale buyers left with no new home and a hefty debt burden. Other large builders in China have since defaulted as they struggle to shore up cash, and demand for housing has fallen. Now, investors around the world are watching nervously as Country Garden, which employs some 300,000 people, missed 2 payments on its multi-billion-dollar debt and said it was considering various debt management measures. The cash-strapped developer's debt is now seen as a very high-risk asset, according to Moody's, which downgraded its rating on Country Garden last week. Country Garden has to pay this early September to make the payments it missed.
So many people had called this as a disaster waiting to happen that it seems crazy that the offshore bondholders did put so much cash into the company. Massive investors from BlackRock to Goldman Sachs to HSBC, their funds invested in these bonds. They plowed billions of dollars into an already overheated market because they believed that China would never let its construction or its property sector fall. Turned out to be nonsense.
There were warnings before the pandemic that China's property market was overvalued and developers were too reliant on debt. In many parts of the country, rows of residential high-rises, nicknamed ghost cities, sat empty with the lights off. The sector's problems had been brewing for years, but were overshadowed by the continuous rise in house prices, which meant there was no pressure on the government to do anything about it. Excessive borrowing was encouraged, and local governments, developers, and households took on huge amounts of debt. Many relied on credit and pre-sales for their funding. In June 2021, Nomura analysts said Chinese developers had debts of $5.2 trillion. Speculation was rampant as developers had easy access to debt and were predicting that demand would continue to surge. Prices in many cities, however, were becoming unaffordable for average workers. In 2020, the Chinese government responded with new rules called the Three Red Lines, designed to prevent a bubble and correspond to the President's Common Prosperity Drive aimed at leveling the playing field between the rich and poor. The rules restricted the amount that developers could borrow each year and introduced tougher lending requirements. The move coincided with the coronavirus pandemic, as lockdowns brought the Chinese economy to a standstill. Many developers could not meet the new requirements. The most high-profile one was Evergrande, which in December 2021 missed a deadline to repay interest on about $1.2 billion of international loans. Credit rating agencies declared it in default.
China's economy is really struggling at the moment. We've talked about the fact that it has hit deflation, prices going down rather than up, super unusual considering the rest of the global economy. We've talked about the fact that growth is down, trade is down, and indeed the central bank there having to cut interest rates earlier this week. Most unexpected as the world's second largest economy struggling really to get back after the pandemic, Tig.
It's hard to overstate the importance of the property market China. The industry accounts for as much as 30% of the country's economic activity, and more than 2/3 of household wealth is tied up in real estate. But nearly 3 years of zero-COVID restrictions sapped China's economic growth, and consumers have been reluctant to buy new homes in the face of higher unemployment and falling property values. After a brief surge in activity earlier this year, China's economic engines have been sputtering. Consumer prices last month fell for the first time in more than 2 years. Youth unemployment has been rising so fast, Chinese authorities simply didn't release the July data. Retail sales, export demand, and factory production are all down. For decades, Evergrande, once one of China's most successful real estate developers, gobbled up debt as China's economy exploded. Demand for housing was so strong, home builders often pre-sold apartment units to buyers before construction was complete. But a sudden shift in policy by China's leaders 2 years ago has left the country's property developers scrambling for cash, compounding financial risks within the world's second-largest economy. While Beijing has made some efforts to help jumpstart demand for housing and free up cash for developers, the days of big, state-funded bailouts for bloated industries appear to be over. As President Xi Jinping said in a recent speech, we must maintain historic patience and insist on making steady, step-by-step progress.